So the way that we like to look at it is demand versus supply, and go back to basics and always keep it real, I guess, and look at the fundamentals and ask ourselves, how do the fundamentals sit against each other? Do we have more demand than we have supply? Because if that's the case, then we're unlikely to see significant price decreases, in our humble opinion. So what we're going to do in this section is, first of all, look at the demand drivers and consider where they sit and where they're going to be going, and then look at supply. So it's that balance of demand and supply, and that's what we encourage people to do when they say, what's the market going to do? Well, we really encourage people to take account of all the drivers. Okay, so let's jump into demand. So this is national sales volumes, and it's a reasonable measure of demand. And if we overlay that with population growth or population trends, we can see that, first of all, that the country's going to grow. So the population will grow, and it's been forecast to grow by Department of Stats. And look, there's some discussion at the moment around whether previous, some of the records to date have been accurate, but the reality is that we've still had growth. So if we overlay net migration across house sales volumes, so I'll just let you absorb that for a minute. So if we overlay net migration over house sales volumes, if you look back to the last couple of booms, not the one they've just been through, but back to 92, you can see there's a really close correlation. So population grows and house sales volumes take off, which is just common sense. It's just demand. People come to the country, population grows, they need somewhere to live. Net migration drops off and demand shrinks, and we've seen that historically for two cycles. Now what we've experienced is that population growth has grown at record levels, and even if you slice the top off that, is there perhaps a little bit of overstatement? Hey, we've still had some really significant growth, and what really interests us is that the net migration has spiked, but sales volumes have not kept pace. So how could it be possible that we have all these people coming into the country over the last few years, since 2013, but we're not seeing the historical corresponding response with sales volumes? Well, quite simply, we just don't have the supply to be able to meet that demand. And I think there's general consensus that we have a housing shortage in New Zealand, and I guess you have to have your head in the sand if you're not hearing about the commentary around what's happening with KiwiBuild, etc. So that's the first really critical piece to take account of. Demand drivers. One of the most significant is population, so population growth. If we lose population, obviously demand is going to shrink. So what about interest rates? How do we think about interest rates? So again, the orange line is sales volumes, and we're looking to see what impact interest rates have on sales volumes. And this graph would suggest there's not a direct correlation. And so if you look back in the early 2000s, you can see the 2-year fixed rate slowly climbing, but sales volumes don't immediately drop off. I'd like to suggest it's one of those sort of secondary drivers. It's still a really critical driver, but it doesn't necessarily hit straight away. It's almost like a delayed impact, where people keep buying because they don't want to miss out on capital growth, and they keep buying and they stretch themselves, and the bank will lend money, so they take on debt, and then slowly interest creep up on them, and they just get to a tipping point where it's no longer affordable, or people just can't afford to buy anymore. So interest rates are absolutely fundamental to demand, but it's not necessarily the impact is not necessarily immediate. What about affordability? So a lot of commentary often around affordability, that prices have become affordable and therefore prices have to drop because nobody can afford to pay for the houses anymore. And that's often one of the key arguments for suggesting that prices will drop. So let's look at the facts. So this measure of affordability is simply the median house price as a multiple of average income. So if we look at that and compare it across cities around the world, and you've got to think cities, you can see that Auckland is not out of whack with other cities. Okay, it's more about as an unaffordable as Los Angeles. It's more affordable than Sydney and Melbourne. Well, it is today. If you think that, if you believe the press that Sydney's prices are going to drop, maybe that'll change. It's more affordable than Vancouver and Hong Kong. And I guess you also need to look at the way this measure is calculated. It's made up of average incomes. We haven't seen a lot of wage growth over the last few years. So yes, prices have risen, but property prices have risen, but wages haven't. And then there's also the issue that we don't have a lot of density in Auckland. We're moving that way and greater density is coming, but when you calculate in a median house price, it's made up of lots of 3-bedroom standalone homes. And over time, as we get more and more terraced housing, then that will possibly, I guess, adjust that median house price relative to income. So I'm not convinced that property is really as unaffordable. Yes, there's a challenge for young people to get into houses, absolutely. But the affordability issue is, well, we see it time and again where people say, I'm going to have to shift further out, or I've got to look at apartment living. Normally, people might get married or get a partner and start living in a house on a section. And certainly when they start a family, but we're starting to see that even in our business, people coming to us, their first home is an investment property rather than a place where they're going to live, because they're happy to keep living in an apartment so they can live in a suburb that they enjoy. Not convinced that unaffordability erodes demand to the extent that some would suggest. Home ownership is going down, and it has been for some time. And you might say, well, would that not decrease demand? Well, in some ways, yes, but not overall, not for housing. So we still need housing. People have got to rent, so they've got to have housing. So it just means that investors have to play a bigger part of the house ownership profile. So just think about that, I guess, when a government might want to demonize landlords. Well, they actually really need them. So, yep, there needs to be protection of the tenant, and we need to treat tenants with fairness. But the government also needs to make sure that they don't kill off investors completely, because they actually really need them. So home ownership's going down, but again, I don't think that means that demand is going to be completely eroded, or it really overall impacts demand much at all. Confidence, hey, it's not bottom of the barrel, it's not low. Government hasn't probably, business isn't raving. The business community is not absolutely thrilled about what government is doing, but overall, I think the economy is reasonable, and consumer confidence not at all-time highs, but I don't know that it's terrible either. So I'm not seeing that as a demand, overly negative impact on demand.